Okay, we'll go ahead and get this May 21st meeting of the Finance Committee started. Roll call, we're all present. So staff, do you want to walk us through what you're going to be talking about today?
Yes, thank you, Bob Samario, Finance Director. So we have two items, one budget and one unrelated to budget. The first item on the agenda is the Rancheria Village Apartments, and that will be covered by Ms. Laura Double. She is our Housing and Human Services Manager, so I'll turn it over to her.
Good afternoon, Chair Dominguez and committee members Friedman and Harmon. I'm Laura Doubles, and I'm the Housing and Human Services Manager. And I'm here today to request a refinance and subordination of an affordable housing development known as Rancheria Village Apartments. Rancheria Village Apartments are located at 424, 428, and 430 Rancheria Street. It's comprised of 14 restricted low and very low income rental units. That breaks down to 8 two-bedroom units, 5 three-bedroom units, and 1 four-bedroom unit. Back in 1994, when redevelopment still existed, funds were used to finance a $560,000 loan to help with the development of this project. The terms were for 30 years at 4.5% with residual receipts for payments. Residual receipts payments are very commonly used to facilitate an affordable housing development and allows the borrower to make payments only if there is any excess after all operating expenses, including fees and debt services, is covered. Oftentimes that does not occur until way later in the loan term. Due to the residual receipt structure, the balance continued to grow from the interest, and in 2014, the owners requested to refinance the loan with new terms in order to secure additional financing from Montecito Bank and Trust for $623,000, which our loan had to be subordinate to in order for the new lender to extend the credit. In return for extending the loan and the subordination, the city extended its covenant 55 more years to 2069 and required amortized payments for 30 years to use the funds for more affordable housing projects. Our current financing structure is that the first mortgage is held by Montecito Bank and Trust, and the balance right now is roughly around $595,000. Our second loan, which is from the RDA funding, a city loan, the current balance as of May 10th is $989,388. So the total debt on the property is $1,584,388. The proposed financing would be that the first mortgage would be from Montecito Bank and Trust at $2.8 million, and then the restated city loan would be at $560,000 for a total of $3,360,000. The appraised value, which was ran, with the rehabilitation that's proposed and the increased Section 8 contract rents that are hopefully going to be increased, it came in at $5,113,000, which was a loan-to-value ratio of 65%. And that's well under our maximum loan-to-value of 80%.
Can I ask a question here, please?
Sure.
So the first mortgage is currently, the principal is $595,000?
Correct.
And so they want to add another $2.8 million loan, or that would include the $600,000?
That would include the $600,000.
So they're going to be getting a payment from MB&T of about $2.2 million?
No, they're taking out a $2.8 million loan from MB&T.
Right.
Yeah, which would also pay the $623,000.
So the bank's writing them a check for $2.2 million.
Basically, after
Loaning
fees
them.
and...
So what are they going to do with that $2 million?
So, okay, the The total fees with escrow, title, loan origination docs is about $58,000. The payoff of the existing loan is about $595,000, less the city accrued interest, which is what they are going to give us a lump sum payment for, which is right about $430,000. And then there will be a cash payment to the exiting partner of about $416,000, and a cash out net of about $1.3 million. And I'll be covering that a little bit more as we go along.
And which parts will you be covering? All three of those amounts?
I will be covering the lump sum payment of the city accrued interest, as well as the change in partnership structure.
Okay, so that third amount, the was it 1.3 million? Where will that money end up?
Share to each partner is estimated at $437,000.
So there's three partners who will receive that 1.3?
Yes.
And what are those partners doing with that money?
Frank Thompson is here today as the managing partner of this. If you'd like to ask him, we can bring him up.
Mr. Chair, yeah, they're basically cashing out some of the partners, and they're borrowing money to do so. From our perspective, that's okay as long as the loan to value is still there and there's enough equity. So our primary consideration was, what's the loan to value here, and is that within our parameters? And the answer is yes. And so the cashing out and how they use those monies and for what purpose is more their business than what we might be concerned about. But still a good question, and we asked the same question ourselves.
Okay, so what I was trying to find out was any of this money, people usually refi and then put some of the money into construction to rebuild a home or rehab a home. So none of this is going into rehabbing the facility?
I am getting to that.
Okay.
It's $215,000 that will be going back into improvements on the property.
Okay. And the appraised value, this $5,113,000, what was the appraisal process? Like, how sure are we that that's an accurate number?
It was a certified appraiser that Montecito Bank and Trust hired to perform that appraisal.
Okay, great, thank you.
So here's a little bit about our lump sum payment. We know that as of 5/10, because of the balance on the loan, we're looking at $429,388 coming back, and that is actually the accrued interest on that original RDA loan that they are going to be paying us back the interest. And then we are going to be refinancing that $560,000 that we originally put into the project at 4.5%, and now amortized over 14 years instead of the 30. And then you can see on the screen the breakdown of the payments. The lower payment is made in the first 7 years because they are looking to hopefully apply for low-income housing tax credits at that time. Sorry, I went back at previous. Okay, I got it. Thank you. So anyways, the first series of payments for the first 7 years is at a lower amount because they are looking to try to apply for low-income housing tax credits. And then we have negotiated the last 7 years to fully amortize the loan with one balloon payment at the end due on June 1st, 2033 of $8,533.87, and that's an estimated figure, but it'll be really close to that. So the subordination request, we will have to be in second position. We will be doing that under Montecito Bank and Trust loan for the 2.8. That loan with Montecito Bank is for 30 years. It has 3 periods of 10 years each. The first period is a 5% fixed rate, assuming that no default occurs. The second period, it will then adjust to the current 10-year Treasury rate plus 2.25%. That's, of course, with assuming no default occurs. And then the third period, it adjusts again to the current 10-year Treasury rate plus 2.25%, and again with no default occurring. So they are proposing a change in partnerships. For this loan, the current borrower is Mariana Ranch Associates LP, which that was the name of the partnership previously as well. They are going to be doing an assignment so that they can remove the Riverside Charitable Corporation partner, and then they will be adding Chance and SBHAC to that partnership. The $215,000 in property improvements will include a new roof with termite damage repair, 2 new parking lot gates, new building paint trim, upgrades to kitchen and flooring, ventilation, and appliances. And from what I understand, I believe most of those have already been completed.
Quick question, Ms. Doubles. On the current financing, is the city loan currently subordinate to the existing MB&T mortgage?
Yes, it is.
Okay, thank you.
So we'll outline the benefits to the owners. They will get the payments with a lower payment for the first 7 years to accommodate their application for low-income housing tax credits. And they will also get the funding they need to pay off their partner that is wishing to exit the partnership, and for the new partner, Chance, that's entering. And they will have the funding to perform the rehabilitation needed for the property. As far as city benefits, this will be no cost to the city. We will actually get a lump sum payment of up to $450,000, which as of May 10th, it looks like it'll be $429,388 in accrued interest. And then the loan term is actually going to be shortened so that we can recycle that funding into other affordable housing projects. And then this also helps us to maintain essential housing program functions as well. So staff recommendation is for you to recommend to council approval of the restated, basically refinanced loan and deed of trust, and subordination to Montecito Bank and Trust loan.
Any questions?
Does this new refinancing extend the covenant, or was it already into 2069?
So because in 2014 we already extended the covenant to 2069, we left that alone. We kept that at 2069 still.
Now, is that as far as we can extend it?
We could extend it more. We can go up to 90 years. It was extended at that point 55 years, but we can extend it if.
What would
you'd
that
like
do
to be.
to this project or this proposal? Because I think the longer period we can have those affordability locked up, I think it's better for the community. But I don't know if that would change the financing here or the request here. But
No, not at all. We can go up to 90 years
well,
if you.
I'd like to
choose.
see that to see that take place, because when it gets here, it could be gone. We might not have another opportunity to do it. Or is it the only opportunities we have are during these types of refinancing, or is there other opportunities later?
No, it's during these times, and I believe that the reason for that was because at the time that they extended it in 2014, there was, I believe, an error in that covenant, and so it took a while to get that actually put in place. So they kind of wanted to just leave that alone, but it is an option to extend it for sure.
I would like to extend it to the maximum extent that we could. Just feedback on that is my preference. And then the other, go ahead.
I'm sorry, go ahead.
Oh, the other question I had is on the 450,000 lump sum payment. That comes back to the city, and do we have a special fund that we're placing that into for affordable housing projects, or is it general fund, or where does that go to?
Yeah, it goes back into our affordable housing fund, and that would be regulated to be put towards affordable housing development in future.
Okay, thank you.
Regarding our loan, so we're going to receive a check for some of the interest payments. And in terms of the principal, what would it look like if we also cashed out like these other partners? Would we be able to put that money into the same fund, the Affordable Housing Fund?
So you're saying that the cash out that is going to be paid to the partners would come our way?
Like a share of it? Because it looks like the loan was originally expected to expire in 2024. So if we were to just to continue along that path, we would be paid out in 2024. Is that correct?
That is correct. So the only thing that we would be able to recoup at this point would be the original $560,000.
Right.
So it wouldn't be the full amount that the partners are getting, but that is the applicant's request, is to have that cash out and for us to go to the original $560,000 and still carry that loan.
Right. And to still have it end in 2024?
No,
That's what I want to do
Oh, I
is
see.
take our money out of this system and have it available for other affordable housing projects.
okay.
For the same reason they're pulling their capital out. I understand it's different in that they were partners and ours is a loan, but to all intents and purposes, we still have $500,000 sitting there that would have been tied up till 2024. So now we're getting the interest out, but not the principal, and we'll get the principal and interest back. And what was the year? In
2033.
2033. So that's 9 years, or if we took the money out now, 14 years, we could have that money available. And we're in a tight housing situation now, so anything we can do to free up these funds, to me, would be preferable.
Just, that's something we can look at. It would change the whole economics of the project. I'm sure we'd have to negotiate that, getting the cash up front versus having it paid over time. But that's definitely an option. I'm assuming that the reason that was structured that way is because it made sense for the project, that to cash out that kind of money that's really impacting existing partners, remaining partners, and on an ongoing basis, the financing of that project. But maybe Mr. Thompson can speak to that. But that would be one of the things that comes to mind for me at least.
Right, and absolutely, I'd want to know more in terms of our entire portfolio. It seems like our real estate has recovered to a large degree since 2006. So you can never predict the future and know whether it's going to keep going up or if it's going to flatten out or drop. But it seems like if we had a chance now, the worry is this loan to value is 65% now, but if we do enter into a recession and this drops, that loan to value could become 100%. It could become greater than that, which would not only potentially lock up our funds, but also create problems in terms of keeping this property rehabbed and renovated. So those are my concerns.
And I think the status quo would be even worse. The status quo would be the term would be even longer. We may not get accrued interest, and the principal wouldn't be paid for even a longer period of time. So this is better than just leaving it alone and having no project and no extension, as it was before. Right. So this is an improvement for sure. $429,000 up front, and then a shorter period getting that principal is certainly better than what it was, previous to this deal.
Do you have a question?
Thank you. Yeah, just a comment. I really appreciate, Chair Dominguez, your interest in moving forward with affordable housing projects. I would say with regard to this loan in particular, I am supportive of this move. I think it is an affordable housing development. We need to be wary of undermining developments that we already have to create new developments. So, yeah, that's kind of where I'm at. I think the interest payment that we'll be getting in June, is that coming? When is that coming?
For this,
Mm-hmm.
I'm sorry.
The 400.
Yeah, once this goes to council for final approval, then that transaction would happen.
Okay.
And whenever Montecito Bank and Trust actually funds their loan is when all of that would come to fruition.
Okay, thank you.
Just to clarify on the points that Chair Dominguez raised, I think you said that if we don't do this, or if we cash it out, then we would only get the principal, which is 560. But if we go through with this plan, we're getting 429 of interest, and then eventually we would get the 560 at the end. So the delta, I guess, is only about 120,000. It's not 560, correct?
No, see, the loan that we currently have is already up to almost $1 million. That's with the interest that was accumulated over that many years. So the 560 was the original balance that we put in, the funds that we put in from RDA funds. All the extra was from accrued interest, basically. So what this deal is basically we would get a lump sum for all of that accrued interest, and then we would be taking that principal balance and just refinancing that.
Okay, thank you. Yeah, the line of questioning threw me off a little bit. That's how I understand it. So we get the 429 now
Yes.
instead of 15, 20 years down the line
Right.
at the end. Okay.
Correct.
And it's 5 years down the line, isn't it? 2024, under the current loan docs.
Yes, I believe so. Let me look.
So it's either getting around $1 million in 5 years under the current status quo, or it's getting about half of that now and half in, was it?
Okay, no, I'm sorry. No, the RDA, the original RDA loan, that was the 2024. It was refinanced in 2014, and it was put on an amortized payment for 30 years at that point. So it's 2044 that we're looking to have that paid off.
So in
With
the
interest.
intervening 25 years, there wouldn't be any payments.
I'm sorry, what was the question?
So between now and 2044, there wouldn't be any interest payments or principal payments on the original 560,000.
No, there is. It's an amortized loan
Okay.
for 30 years, 4.5%.
So what are the payments we'd be receiving?
We're already receiving it, and I believe it's like right around 4,000 a month. I don't have that with me. 42. Okay.
Sorry, I don't mean to beat this dead horse, but we'll be receiving the accrued, if we go through with this deal, we'll be receiving the accrued interest once it goes through. And then this refi, we will also be accruing interest on this new loan. So we will ultimately make more money with this deal. Is that I mean, the interest will continue to accrue on that 560 over the next however many years the term of this loan is, 14?
Correct.
Okay.
Chairman Dominguez, Sarah Connect, Assistant City Attorney. If I could just make one point on that too, with regard to the accrued interest, that we have scheduled the loan over 14 years, and it resets at 7 years. So we'll be getting, I think, 4,300, something like that, the first 7 years, and then after that it'll increase so that. Because the risk in terms of the Montecito Bank and Trust loan, we think increases at that point because their loan resets as well.
At 10 years.
At 10 years, their year, yeah. So we'll be fully amortized in 14 years.
And what does that mean exactly, fully amortized in 14 years?
The entire balance due, which is 560 plus the accrued interest at 4.5.
Will be paid off?
Yes.
There may be a balloon payment of about 6,000 at the end,
85.
8,500 at the end, which will be picked up.
Okay.
Yeah, and one point I also wanted to make is that the condition of the property right now needs rehabilitation. And so we feel that it's very important that the units be rehabilitated. And in that way, they will qualify to increase their Section 8 contract rents through the Housing Authority, Without the rehabilitation, they may not be able to do that. Plus, they've improved their management so that they're more in line with the HUD regulations, which requires that the occupancy of each unit be set to a certain number. And in the past, they weren't kind of keeping up with those HUD requirements. So now, with the Montecito Bank and Trust loan in place, the rehabilitation, they've undergone a management change. We believe they'll be able to increase those rents, rehabilitate the property, which will increase the value overall. So we're also, taking that into account.
So what's the financing that you have in line for the reconstruction?
It's that what we're requiring in the loan is the $215,000.
And that's the amount that's been used to pay for the roof?
Roofs, termites, new gates,
Paint trim, upgrades to kitchens and flooring.
right,
So that's not a lot for 14 units.
agreed.
So will there be more? Is there a
Yes.
renovation schedule for the next 10 or 15 years that shows the costs that we'll need to bear?
We have not, that they will need to bear, we have not seen that, so Mr. Thompson would probably be a good one to answer that, what their overall plan is with regard to the property. They're bringing in a new partner, which is an entity that is new to us called Chance, and they provide housing to disabled individuals that need caregivers, so it's kind of an interesting opportunity for them as well, we think. I don't know if there's anyone here from Chance today, but
Mr. Thompson, do you want to come address some of the issues we've talked about, please? Thank you. Thank you, Ms. Connect.
So I'll be brief. I think you've done a good job of doing the math on the fly there, which is the staff report shows the built budget in categories, but the people that have a transactional approach say, well, how much new money came in? What are we paying? How much money's left over? And so I think you followed that very well. The $215,000 is the result of a professional analysis of the property that was done called a physical needs analysis. That was a company that had to be approved by Montecito Bank and Trust and also is approved by the California Tax Credit Committee. So part of this transfer has a parallel process in Sacramento. And that was their question. Show us the report, show us exactly how much it costs to do the work that needs to be done, and then let's see the money to do it. The second thing was that they are interested in budgeting for the replacements over the remaining term of their control, which is 30 years. They come to inspect the property each 3 years now. Tax credit projects in their first 15 years are inspected every year. But after the compliance period, which this one is, then they're every 3 years. So, and Laura's absolutely correct. We would not get this loan at all without the city $560,000 remaining in the project because Montecito wants to classify this as an affordable housing loan. They wouldn't do it otherwise. And there has to be city money in the project, and there has to be city involvement in the project for that to occur. So I think all the parties have the same objective here. A couple other things. Our partner, Riverside Charitable Corporation, has actually done quite a few projects here in Santa Barbara, and their twin is the Community Housing Assistance Program that dates back to projects in the 90s. Those projects in the 90s are now needing to be refinanced and improved. So there have been other ones that have been here already with them. But in any event, we wanted to bring in a local nonprofit, Chance, which is a service nonprofit, to join us as a general partner here, build their capacity, and provide a certain number of units, not all the units, in the project on turnover. As you can imagine, these 14 units close to the beach in City College have virtually no turnover. We have probably half the tenants are original, and that they moved in with young children. Those children have grown up and brought grandkids into the household. That's how important this facility is. This facility early on was one of the large family projects that included not just 3-bedroom units, but a 4-bedroom unit. This was kid central when they first lived there. Now it's not. And so what we're trying to do is recycle it for an essential purpose with Chance, and I just didn't think you would need him here today because I thought we'd be talking about numbers only. As far as it goes, I also have a partner. Bob and I are the youngsters. I had a partner who put up the financial guarantees for the construction of this project and all the first years of operation, named Peter Kelsch. Many people know him. He was the president of the summer solstice one year. So he's quite a fellow. And he got no compensation. And he reminds us now that he turned 81, that it's time for him to get something out of this project. You know, when you go to a business and there's a dollar bill up on the wall, yeah, he didn't get his first dollar bill yet. So it's important to us, Bob and I, to make sure that he gets that. And that's it. Bob, he can speak for himself about what will happen with his share of the funds. But I can tell you, I've borrowed money to start 4 more low-income housing tax credit projects in the county. So I'm fully committed, just not here.
And it's
you have any
great
other
to
questions?
great to have a committed partner. No city is more committed to affordable housing in the Central Coast than Santa Barbara. One question, or as many as you need.
Yeah, just the one question on the affordability extension of 90 years. That doesn't affect the financing, and that would be
Well, it won't.
you on that question.
But the appraisal was done by one of our best appraisers here in Santa Barbara. It took him about 4 months. And he's done other affordable housing projects. But in any event, this was appraised by a discount of net operating income with all the restrictions in place. So for an appraiser standpoint, from a 30-year, a 55-year, or a 90-year control is pretty much.
Okay, so the 90 is
Sure.
wouldn't affect. Okay,
It doesn't
thank you.
affect
That's
the
all I
value.
had. I'm supportive of the project and the 90-year.
Super. All right. Anything else?
What is the nature of Chance's investment here? How are they buying in?
Good question. So Chance is a contractor with the Tri-Counties Regional Center. And Tri-Counties provides, I would guess, about 80%, maybe 90% of the annual budget for Chance, which is about a 3 FTE agency. They provide services to, I believe, about 340 families with developmental disabilities per year, which is mostly about housing counseling and helping those families not be homeless when they need to move around in the very, very tight housing market that we've got. So they really provide just-in-time service on housing and then also long-term planning for housing. They work very closely with both of the housing authorities and Tri-Counties and all sorts of other funding sources to come up with deposits, moving expenses, emergency utility. So that's the nature of their involvement. Where do they get their money? They have, I believe, around 150,000 net worth. They have about 35,000 in free cash. I'm sorry, but I mean, this is what we evaluated. So we're not making them the partner. They're the junior partner. Bob and I will be making the guarantees. If everybody got up and moved out one day, we'll get together to put the money together to make the city loan payments, which we think will not happen. And so, but we're not depending on them to do that. As it turns out, though, Bob and Peter and I will make a grant to Chance for $400,000. And Chance is actually paying Riverside $416,000 for the departure. Are you following me?
I think so, but what I think I'd like to do in the interest of time is if you can forward us a summary of what you've just described, because it seems like there's several moving parts that aren't in our documentation here.
Yeah, I don't want to say that. I think your staff has done an excellent job of.
They have,
No,
absolutely.
No, they have, because they identified to you that there was the money to Riverside, but the exact mechanism that gets there is not that the partnership pays Riverside. It is that the partnership, the owners of the partnership, make a charitable contribution to Chance, and then Chance uses that to retire the Riverside share.
Is that just a tax avoidance?
It's that, but it also builds Chance's balance sheet. If we just paid off Riverside and admitted Chance for $2, that does not help their balance sheet at all.
It wouldn't help their balance sheets because they wouldn't show up as a certain percentage partner.
Correct.
Because I don't think it really matters how much they pay, it's how much they show in terms of equity. or
No,
receipts on an ongoing basis?
I mean, for some purposes, but not all purposes.
Okay.
Yeah.
Yeah, again, so I'm comfortable with what you've presented so far, but if you can get the committee a copy, I think it would just increase our level of comfort up here.
Yeah. Sure.
We're not accountants, but at least a couple of us are lawyers and have done transactional work,
Right,
so we just want to make sure, the devil's in the details. We all love this concept, but we just want to make sure we do our due diligence on behalf of
Well,
the
sure,
city and its
sure,
residents.
Sure, but I do want to assure you of something else. I mean, your staff really has been very thorough. We have a 28-page contract which clarifies all of this for each of the roles of the parties, and your staff's reviewed that. So we're happy to give you a copy. I have a copy right now. I'll give it to you.
Thank you.
Yeah, that explains
Mr.
it.
Chair, I'm actually prepared to move the item with the 90-year extension. So I'll make that motion. Or we need public comment, I guess, first before we can do that, right?
Yeah, I want to make in the interest of time, maybe just have a quick clarifying question for my comments. I'm trying to understand our role here. It's not really to get into the weeds on the specifics of the deal. I understand, I'm a transactional lawyer, so I'm interested, but that's not why I'm here today, I'm not the city's lawyer today. So I'm not sure that it's relevant for us that we understand those mechanics. The loan has already been made. The bank has already costed this loan. So for that reason, though I am similarly interested, I will be seconding Member Friedman's motion.
Absolutely, and I'm assuming the motion is to send it to the full council. And what I'm requesting is just a chance to look at some of these materials between now and then. I doubt it's going to change the outcome. So at this point, unless there's other questions, I'll open it up for public comment. I have one slip, but I don't think it's on this issue. Nope. Okay, so I'll close public comment. And did you want to make a comment?
I just wanted to note that this is going to be coming to council in 2 weeks. Our intention was that it be on a consent item. So that's kind of the plan for now. But we've been looking for your recommendation for sure.
So I'll move the staff recommendation with the 90-year extension on the covenant.
And just so I'm clear, in terms of the 90-year, that's what's in the staff presentation, or did you want to alter?
That does need to be altered.
Chair Dominguez, Sarah Connect, Assistant City Attorney. So if we amend the covenant, we'll need to bring a new document to the council, which would be an amendment to the covenant to extend the term, I think, from 2014 onto 90 years. Or were you thinking we would go back to?
No, today.
From today? Okay. Because typically we don't start 90 years from the refinancing. We would go back, but we could start the 90 years from this loan closing. Yeah, so it would just be a new document, an amendment to the covenant, which is no problem. We can bring that to you because this whole transaction needs to go to council in the form of an ordinance approval because the loan is over 5 years. So we'll just add a covenant to that.
And so from which date?
It'd be from this date, 2019,
Okay.
90 years.
June 4th.
Okay. Do we have a second? Second. Okay. Any other discussion? All those in favor?
Aye.
Aye. That passes unanimously. Thank you very much.
Okay, well, Mr. Bodette is getting the PowerPoint ready to go. We're here to talk about budget. So this is the last day where we're having discussions with the Finance Committee and we're looking for recommendations on all the things that we brought to you over the last several weeks. One of the things that is the last thing for you to consider today, along with requests from outside organizations, is what we call staff recommended adjustments. And this is very typical where we file a budget in April. We have some changes based on new information, technical adjustments, and we're going to present those to you now. And then we'll move on to the other items, requests from outside organizations, and then looking for direction and recommendations from you all on all the things we have presented thus far. And we'll show you them all and we'll go through one by one to kind of walk you through that. So with that, I'll turn it over to Mr. Bodette.
Okay, Chair, members of the committee, good afternoon. So Mr. Samario framed that perfectly. So I have some recommended adjustments to present to you today. Again, these have taken place since we first filed the budget back on April 23rd. I'm just going to start them, get into them. So the first adjustment was included in your staff report, and this is the only general fund adjustment. However, this was an addition for a position to the police department that we're still internally discussing on what exactly we want to do with this position. So I'm going to actually ask that while I'm giving you a heads up that we might remove this position, we're still discussing it, and I'm going to ask that you don't make a recommendation on this particular one today. If we do decide to move forward, we would definitely bring this back to you for consideration. So the next two are actually two projects, citywide projects in our information technology. One being the website content management system in 2021. Half of the funding for this has already been secured in the recommended budget in the general fund. This is the other half that's being allocated out to the special and enterprise funds. We just didn't make this into the budget as far as how we would appropriate it. So this is exactly how it would be appropriated to the specific funds. But this is the remaining half. So this is the 2021 portion I'm showing here for the website content. And the other project would be the constituent relationship management project. And this would be for FY20 for this one. Moving on, we have the airport department. So they're adding 2 positions, and they included this in their presentation to full council and kind of gave you a background as to how they came to the decision to include these positions. And then the community development has, they're just adjusting some the grant allocations in their CDBG and home programs. They just get new information and adjust the revenue and appropriations accordingly. The finance department. So the solid waste fund has an inclusion. Have a little asterisk next to this because this isn't included in the staff report. But we will asking that you make a recommendation. But they are adding $20,000 to the homeless camp abatement, and specifically this is related to work in the parks. Library has some adjustments in their county library fund. Not the general fund central library, but the county library. So the Montecito library is adding some hourly salaries allocations just for coverage purposes, as well as the Carpinteria library is getting some extra revenue. I believe it was Measure X that the city is contributing a little bit extra, and the Friends of the library are decreasing their contribution. So the net is what's being shown there. So that's some extra revenue there. And last, the Public Works Department has a couple. The Fleet Management Fund has a compressor generator appropriation that they're adding for 2 of those. That's just due to emission mandates that they need them. And the Measure A fund is decreasing their work order revenue. They actually no longer have engineers that are billable positions in that fund. They've been moved to different funds, so we're removing the billable revenue portion out of that fund. And that concludes it for special enterprise.
Any questions? So my only question is regarding the website content management project. You said that's just for fiscal year 2021. That's because that's when that starts?
That's correct.
There's
yeah.
no component next year,
So-
and then
Yeah, exactly. That one would start in 21. This one, the opposite one, would start in 20.
the CRM starts in 2020.
Yes,
constituent.
Correct.
And the 157, that's for both of the budget years? Or is that per year?
That is just the single year for 20.
And so what happens in 2021? It's only a 1 year, one-time startup?
Exactly.
Okay, perfect.
Yeah.
Okay. And is this a separate item from the outside? Do you want to do public comment and a vote on this one first, or?
I don't think we need to do that.
Okay.
We'll move on to the next slide.
Okay.
So these are the requests from outside organizations. You've heard from most of them. The one that you did not get a chance to hear from last week was the Santa Barbara Culinary Experience. So I would suggest letting them speak. And then we had one request that you all got a copy of from Ms. Kathy King. She is representing Earth Day, and she had a request for additional funding. And so you might want to give her some time as well. And then once they're done, then we'll have some of our own comments, and then we'll move on to looking for recommendations.
Okay, great. Come on up to the mic.
Good to see you again. Hello, Chairman Dominguez and Councilmember Harmon and Friedman. My name's Eric Spivey. I'm Chairman of the Julia Child Foundation for Gastronomy and the Culinary Arts and the organizer of the Santa Barbara Culinary Experience. The Santa Barbara Culinary Experience, it will shine a bright light on why Julia Child chose to live on the American Riviera, and is at one of only 2 events in the world that will be endorsed by the Julia Child Foundation. Bottom line, our goal is to, in each year in March, increase hotel occupancy, increase restaurant bookings, beverage and artisan sales, and increase activity in a broad range across public and private spaces throughout the city, but also to increase domestic and international awareness of Santa Barbara as a world-class culinary destination. I sent you some emails this morning. I'm not sure if you had a chance to review, but that gives a much greater comprehensive details on that. My intention is only to speak about 3 minutes, as I'd like to have you have a number of amount of time to question for me. Our request is that the City Council be a founding sponsor of the Santa Barbara Culinary Experience for $50,000. Let me share 2 milestones with you. First, August 15th, 2019, which is less than 90 days away, and it was Julia's birthday. August 15th, 2019 would be her 107th birthday. We're having an event at the Montecito Club, and we are going to be bringing media across America, both in California but across America, to come spend 2 days in Santa Barbara to review all the culinary attributes that Santa Barbara has in a way to hopefully have them understand the riches of Santa Barbara, but also to be able to announce the March 2020 event. The second big milestone is a March 13th through 15th, 2020 event called the Santa Barbara Culinary Experience. It's going to be including all the restaurants, hotels. We've been meeting with the Hospitality Board. We've met with Visit Santa Barbara. We've visited with the mayor. And we have a advisory committee and an honorary committee that is committed to making this a very big event that will have a huge impact on the economics of the Santa Barbara region. The event in March of 13th through 15th, we will also be providing a number of signature events, including a welcome reception, dinners, local artisan market, key panels held throughout the city. We will be having each of the restaurants and hotels have programming about Julia and Julia-themed events. And our intention is that in our second year, we will go from thousands of people attending, several thousand, to 5,000 to 10,000 people attending. About 70% of the people will be from the outside of Santa Barbara, but we'll also be doing programming to help and engage local community at a very varying range of price points. So I'd love to answer any questions you have. In summary, we hope the council will be supportive of being the only city other than Washington, D.C. to have a major event that includes the involvement and endorsement of the Julia Child Foundation.
Questions? You mentioned the Montecito Club. Has
Yes.
the county funded this project?
No,
Okay.
no. No one has funded this project yet. The Julia Child Foundation has funded this project. So our intention is we're going to be spending over $535,000 in the next 12 months producing this event. And so the $50,000 that we're asking from the city council is less than 10% of the amount that we're going to be spending on creating an event that can, over time, make a big, huge, sustainable annual event that helps and brings all members of the Santa Barbara community up together.
Okay. Have you gone through the events committee
We
funding
have.
process?
We've approached them. We filed. Their limit is $20,000, and our belief is that we really would do much better and we'd accelerate success in year one if we got $50,000.
Okay. Thank you very much. Next, we'll hear from Kathy King from Community Environmental Council, representing Earth Day. I think I've heard of that.
Good afternoon, Chair Dominguez and members of the committee. Thank you so much for fitting us in today. This has long been on our wish list, and we just didn't know how to navigate this process. So I really appreciate all your help with getting us here. We're very grateful that the city currently supports the Earth Day Festival at a $10,000 sponsorship level, and we are also well aware that this is much lower than the other major festivals in town, and we do consider ourselves to be on a par with those other festivals. We have large groups from places like GM and Toyota that are sponsors that bring in large groups to work the festival, and they also come from out of town, and so they stay here. So we don't know what the TOT numbers are, but we do know that we have that there is some benefit to the city in that. We also have been watching the city's fees that we pay go up on an annual basis, and currently what we are paying out to the city in terms of fees, police presence, site rentals, the city's booth that we put together as part of the sponsorship exceed the $10,000 sponsorship by almost $15,000. So I know that the request is listed as $50,000, but really we would be happy to cover costs. This isn't a fundraiser for CEC. This is our gift to the community. We structure it as community outreach, and we are really just looking to recoup costs. And we assume all the risk, and we have set up 3 revenue streams that generally help us do that: sponsorship, registration fees, and concessions. And a year like this made us realize that concessions can be tricky when the weather is what it was for most of the month of April. So we definitely didn't achieve as high of a level as we have in the past and as we had hoped for this year, mostly due to the weather, because, we don't go in fully covered until we cover all our costs with the concession side of it. We are also a very eco-friendly event, not only in what we outreach to the community in terms of the education, but in terms of the infrastructure that we set up. I believe we're the only major event that has a company hand sort all the waste. So there is a landfill diversion benefit to it, and also just an educational opportunity to show the community that we are taking care of all of the waste in a responsible way. Next year's the 50th anniversary of Earth Day itself. It was a concept that came out of the 1969 oil spill, as was CEC, so we will also be celebrating 50 years next year. So there's no better time for the city to have a stronger and more beneficial presence than next year. So I think this is great timing. I think that we always see a decent amount of press outside the region, but I think with the 50th anniversary, we will amplify that next year, and we would love to see the city as a more major partner. So thank you very much.
Thank you. And is this something you see as an ongoing request, or is this a one-time thing because of the 50th anniversary? 50 for 50?
Well, at the 50 level, certainly, but we would definitely like to be able to cover the costs that we put out to the city on an annual basis.
And I'm guessing because you just submitted, you didn't go to the event committee either to seek funding?
No, we've been a line item in a strange portion of the budget for a few years, and so I think we were just trying to go on the same trajectory that we were on.
Okay, thank you.
Thanks.
Any questions? Okay, Maggie Moss Tucker, and then Robin Yolander after Ms. Moss Tucker.
Good afternoon. I'm Maggie Moss Tucker, and I am just here along with a few committee members of the group that has proposed not a Van Gogh exhibit marketing, but a 3-month celebration, multi-generational citywide. So I just want to clarify that. 3 months, multi-generational citywide. But I also decided to just do a quick sidebar in the letter that you received, and we hope you got the second one as well from Helene Schneider. My husband was the one who curated the Monet exhibition in Boston. That year, he was given the most prestigious, highest award by the Bureau of Tourism because it did more economic impact than the Red Sox that year. So I share that with you because we believe that this will have an enormous impact economically, and I'm talking to the Finance Committee, for the city. So we hope you'll support it, but we are here to say if you have any questions.
What are the Red Sox? Any other questions? Okay. Robin? one more speaker. And then
Finance Committee and City staff, thank you so much for considering the Cool Block proposal today. I wanted to point out that the Cool Block at its heart is a community engagement strategy that can support and enhance many of the city's existing programs as well as the greater goals of the city, and can also grow and change over time. For example, it can serve as a conduit to our citizens and our residents to build and support and work alongside the fire department and our CERT teams. It can build our diverse city leaders for city commissions, committees, and support the neighborhood outreaches work. It can also support with community policing goals, disaster resiliency, and the overarching environmental strategies that the city is working on. The program is fully customizable based on the needs of the city and its departments and the goals of the staff involved. Thank you again for considering the proposal, and I'm here to answer any questions you may have.
thank you very much. Any questions? Okay,
Thank you.
So with that, I'll close public comment.
Okay, so
And-
just a few comments from staff. Not going to speak to the merits of generally to the merits of the request. I'm sure they're all great. Just some context. You're familiar with where we're at from a balancing perspective and all that. So all of these are represent additional monies that we'd have to find. But I will make a few comments on each of them. Downtown Santa Barbara's request for an economic development outreach director, $50,000. You know, we have a Cosmon study that's coming up in the next month or two. Not sure what they're going to recommend, but they may recommend that the city have its own economic development manager position. So maybe the timing of this request is a little premature. Might want to wait till that study comes back with its recommendations before the city acts on this. The Van Gogh the Van Gogh 3-month event, it is additional monies. What Ms. Snyder recommended was that it go through, at least have some oversight from the Arts Advisory Committee. She was not suggesting that would go through a competitive process, which is how all those sort of monies are allocated through a competitive process, but just that they'd have some oversight so there's more accountability to that. But it is extra money. I'm not even sure that they would qualify into those pots of money because there's no nonprofit organization, nor is it, in the first year at least, there's no event. It's just marketing. And then I'm going to have Mr. Matt Forrest speak to the Cool Block program. He's been working with us more closely than anybody here, and I think he has some comments. And by the way, this is a 3-year or 4-year request. That's well beyond the 150 that's shown here.
Good afternoon, Finance Committee. Matt Forrest, Senior Assistant City Administrator. We've been speaking with the Cool Blocks folks for about a year. We've done quite a bit of due diligence, speaking to other cities. Palo Alto was one of the ones that we spoke to quite a bit, primarily for two reasons. One is because Cool Blocks began and sort of had its genesis in the Bay Area, but also Chief Eric Nickel, our new fire chief, came from Palo Alto. So to the extent that this has a nexus to resiliency and those sorts of things, we wanted to understand them. The Cool Blocks program, from my understanding and from what I've learned, has 3 primary components to it. The first is sustainability. And the way staff looked at it was, to what extent does the city have existing programs or initiative in place? And this all has to do with, finite funds and bandwidth of staff. We're a pretty lean organization, as you're aware. So from a sustainability standpoint, staff's perspective is that the direction you've already given us in relation to the strategic energy plan, for example, this big work plan that we're putting together to get to 100% renewable electricity by 2030 is a big lift. It's a big lift financially. It's a big lift with staff time. So I'll leave it to you to weigh where you want to put that funding. But certainly the strategic energy plan is going to have a financial component to it. And we're going to have to put, some fairly substantial dollars toward implementing your council goal. The second is resiliency. Now, there is a piece of resiliency. In speaking to Chief Nickel, he said, no, we're all for resiliency, especially here on the South Coast. Our preference and the primary vehicle by which we accomplish that is through these community emergency response teams. This CERT program, it's run out of the city OES department. It's bilingual. We have the CERT program as well as LISTOS, which you've seen of late, certainly through the Thomas Fire. And the chief's concern was either duplicative messaging or counter messaging or at least dilution of effort, right? So his preference is certainly let's put the focus in on the CERT programs and keep it there and keep building that robust program as the primary vehicle. The third item is really connected neighbors, connected neighborliness. This is one of the areas that came up in our due diligence calls with Palo Alto, with Los Angeles, and with San Francisco. The premise that connected neighbors, those that are connected that know each other, do yield more livable, safer, more enjoyable communities. That seemed to bear out across the board. So I'd kind of leave it to you as to what you're looking for. If it's environmental, I don't think staff really supports it. If it's resiliency, the fire chief would rather have it in the CERT program. If it's connectedness, there may be an ability to tailor a program to that. As you're aware, with any new initiative or with any new employee, the first year is really tailoring curriculum. You put a lot into it. And so if, we probably won't see the real big outcomes until the out years. And I think that's the reason for the multi-year $320-something thousand request in total. But I can answer any questions if you have them.
Thank you, Mr. Ford. That was enlightening. I think one of the comments earlier by Ms. King about waste diversion. So it was successful at Earth Day doing waste diversion for that one group, but what about the other 360 days a year? I think this is something that might allow our communities to really dig in deep because like you said, our goals are lofty for sustainability for the city. We're going to need a humanities component to go along with the science and economics. So I think it's worth considering. Any other questions for Mr. Ford? Thank you very much.
And then I'm going to have Ms. Laura Doubles come up and speak to the request from the Housing Trust Fund of Santa Barbara County.
Good afternoon, Chair Dominguez and committee members. I'm Laura Doubles. I'm the Housing and Human Services Manager. I'm here to talk to you today about the Housing Trust Fund request. Staff believes that this is a really good program. It has a very good concept of helping first-time homebuyers, and we very much support that. Our understanding for the funding that we had the first time around, which was 2 years ago, was that it was a one-time request. Apparently that has not been the case, as that they've come forward again. But they do have some reasonings behind that created the issue for them requesting a second time. The other thing that staff just wants to make you all aware of is that we have just found that there is no guarantee that the loans will be for homes here in the city of Santa Barbara. So they are financing homes within a South Coast region. We are a part of that, and it definitely does help our workforce, especially giving employees an opportunity to buy. It may just not be here in the city of Santa Barbara. Thank you.
And then the last item, or not the last, the next item is the Santa Barbara Culinary Experience. You've heard that. I have no real comment about that. It's just additional money we would need to come up with. And then the Earth Day Festival, $50,000. As Ms. King mentioned, in the city administrator's budget, there's currently $10,000 that is a line item. They don't have to request it every year. It's an ongoing automatic unless there's a change to that. So they have the same status, not magnitude-wise, but same status as Old Spanish Days, Semana Nautica, and so forth. So that's really it in terms of our comments. We can look to you now for your deliberation recommendations on each of these items. Which ones you'd like to recommend to council or not? You can do them individually or as a group.
So I'm open to suggestions how to proceed. I think my default value would just be go 1 to 5, and maybe just do a vote up or down, and then at the end wrap it up in a motion if everyone's comfortable with the results. And if anyone wants to discuss, I think in general, these are all great programs, and I think for ones that we don't fund, we're going to push to get them to sources that might be able to provide funding, whether it's a different city budget, the event committee, housing, or the arts fund. But I think that's one way to proceed. Okay, so we'll just start with Downtown Santa Barbara's request for a director. Do you want to comment or just vote?
You can just vote.
Okay. Do you want to start?
start. No.
No.
No. Okay, Museum of Art Van Gogh.
No.
On this one, I'm actually, I just want to make a preference on this. I don't want this process to be an end around. This happened at the county. On this one, I've gone back and forth on it. It's only for the 20,000 for the first year, and my reasoning for supporting it's an extraordinary circumstance in that this part of town, the businesses have been really affected, in particular by the construction at the museum and then Library Plaza. And this is a one-time event, international in significance, that will tie into not only the museum's reopening, but if we can get everything lined up, it would also be the unveiling of our own city infrastructure at the Library Plaza. So there is a city component of it. And again, those businesses have been really impacted over the last few years. And so this proposal is not conducive to going through the normal process because there's not a nonprofit, so there really isn't another way to do it. So this is an exception that I would be willing to make, so I'll be voting yes.
And yes. Cool Block Program.
No.
No.
Yes. Housing Trust Fund of Santa Barbara County.
No.
I'd like to do it for just 1 year to see if there are any residents in Santa Barbara that are there, but not the second year.
No. Culinary Experience.
No.
No.
No. Earth Day Festival.
No.
No.
No. Okay, so by my math, just the Van Gogh passed with 2 out of 3. Did I calculate that correctly? Okay.
If I could just make a quick comment. I did not support any of these, except I support all of them deeply. Really and truly, I do. I just, for me, I'm very sensitive to process issues, and so I felt that fairness dictated for me that I had to make these votes. But I'm very, very excited to see all of your programs, and I think it portends well for our community. So,
And just to be clear, this is not a final decision. It will be presenting all this to council, and then we'll look for 4 votes either way on each of these items at that point on June 5th.
I just also wanted to say to all the groups, I appreciate the great work you're doing. And like I had mentioned, and I think Councilmember Harbin talked about it, this is not a normal process. And then my experience at the county saw that it became a normal process, and there wasn't a way to make it a level playing field. And the 2 that I supported were exceptional cases, and but I want to find a way to see if there's a path for those that didn't get funded to come through our standard process, which Chair Dominguez mentioned earlier. So thank you all for your submittals.
And I agree. The one that made it through, it was a relatively low amount, and there wasn't a channel set up for it. This is a extraordinary process. This is not an ordinary process, and unless we want to change that up, which I don't think there's any appetite given our budget issues to do that. The normal channels are through the community development grant process, the event committee, and those are the ways I would refer people to look for their funding if they want to go to those processes.
And this last slide, if you can do kind of as a group, these are the things that we presented to you over the last several weeks. I will mention that on the 3rd bullet, staff recommended adjustments. If we can just pull out the one item, the very first item, the $114,000 for the police, we're going to hold that in abeyance and we'll bring that back with more information on June 5th. But the rest of them, we're looking for recommendations from the Finance Committee.
I'll move the amended staff recommendation.
Okay, any discussion? All those in favor?
Aye.
That's unanimous.
Great. Thank you. I think
So
that
we
wraps it up.
will be back on June 5th.
Yep, thank you.
Meeting adjourned.